the author of the blog. You can find us on the web at successfultradings.com, and more about the purpose of this channel and our blog in the description below. In the series that we called Top Weekly Trades, we review some of the trades that we took during the week, and we provide that review here on Friday on this very channel. So today we are going to review a trade on McDonald's that we took. Here is the daily chart for McDonald's, and the earning release came in on the 22nd, and it was received poorly. So McDonald's has been trending down, trying to find some support. But here, this past Monday, it further dropped down from the support that it had about 192, and it traded much lower at this candle. So I usually do not trade news at all, so McDonald's wasn't even on my radar. Tuesday, there was heavy volume pre-market, and that volume was bullish. And I decided that, hey, I will take that trade. The volume was about 120,000 shares for McDonald's, so that's quite heavy on the second day. The 5-minute chart on that Tuesday. So you can see actually that there was some bullish action at the close on Monday. So for those who were able to get on this trade, maybe let's say in the last 25 minutes on Monday, that was something. I wasn't one of them, but on Tuesday morning I put in my bid, and let me share with you how was my entry. So here is McDonald's, and for me, I put in the order for the November 8th expiring. So we are Tuesday morning, and we were Tuesday morning, and those were expiring on Friday. And three calls for a limit bid of 20 cents. Notice how this order was placed before the market opened. This is something that I do most of the time. So I will talk about more onto the So I got in the trade at 9.35 at that very price of 20 cents. And if we return here, so the trade developed and it hit some type of overbought situation on here. Then it came back to support for a while, and then it went back. Start going back up to establish a new high. That is nice when you're in a bullish trade where the stock is putting in a new high. So let's then see when I decided to exit the trade. So this is that order. So I practice what I call scale exit. So we will talk about that a little bit more on the blog. I think there was a chapter, an article where we made allusion to that. So in this case here, out of the three contracts that I had bought at 20 cents, I'm selling two of them about at 11:48 Eastern time. So this is from a trade that we entered at 9:35. So this is 2 hours and 20 minutes later for 75% gain. So why do that here? Because really, by selling these two contracts, I am pretty guaranteed that this will not be a losing trade, because remember, I bought three at 20 cents. So that's also key on there. So now, if McDonald's were to continue riding on that day, since we still have plenty of time before the end of the day here, I will just let that winner run. So that's what happened, and I did not sell McDonald's. I did not sell that contract at close, and I decided to carry it until the next day. And what happened the next day? A gap up from the close here at 192, almost 192. We gap up at $1.5 higher, and the open how long I stayed in the trade. If we bring back my sell order here, okay, the lone remaining sell order, so we can see that it's now 8 on the 6th Wednesday, and I'm selling it at 10.12 for my limit price was $1.05, and here I got a fill at 107, so 2 cents higher than what I was requesting. That's nice. That's nice. So that happens sometimes. So let's then understand why am I. First of all, let's look at where is that on the chart. So on the 6th, we're talking about 10.12. So here, the time I'm looking at the bottom, it's on Pacific time. This candle here is where I sold. I decided to sell. Obviously, it's not the high, the full high of the day is here, but I didn't wait there. You may ask why. I'm glad you asked. Let me show you why it triggered me to sell at that level. So this is 10:12 was the time, right? So for me, I put this is a 15-minute chart showing the value of that option as a function of time, as the stock is varying. So here we have a slight apologize. We will devote a chapter about these indicators at a later time. So here, the high on this candle is $1.15 for me. I sold it at $1.07. Went even higher, about up to maybe $1.40, but then after that it retreated. So this is the reason I got out of the trade, overbought situation, so having bought them at 20 cents at the time of my selling $1.05 or so, that's 435% or so. That's pretty nice. And that was it really for this trade. Throughout the rest of the week, it's interesting. We will talk about patterns on another video. Look how McDonald's finished today, and look at this very pattern here I'm talking about. See this movement here, same one here on Thursday, the same one here. Interesting, meaning if people were to take shorts from here, they would have made money on these 2 days. Option trading overall in the market. So thank you for watching the video. Please subscribe, like, share, and come back next week for another review of another trade that we have taken. Thank you very much, and have a good evening.